Imagine this. The United States of America, often seen as the most powerful country in the world, is currently carrying an enormous national debt. We're not talking millions or billions, but a staggering figure that has now surpassed $38 trillion. It's a number so vast, it's hard to even comprehend. But what does this actually mean? Is this just a statistic on a screen, or is it a ticking time bomb, a warning sign of an approaching global economic disaster? In this video, we're going to break down how the US debt crisis formed, where it's heading, and most importantly, how it could affect you no matter where you are in the world. This isn't just about America. It's about the entire global financial system. So buckle up, because we're about to dive deep into one of the biggest economic stories of our time. First, we have to ask the fundamental question. How did the US national debt get this big? The answer isn't simple. It's not one single event or decision, but a culmination of decades of choices. Think about it. Costly wars stretching over years, massive social programs like Social Security and Medicare, and more recently, the unprecedented stimulus packages rolled out during the pandemic. On top of that, you have rounds of tax cuts that reduce government revenue, and the relentless rise of interest costs on the debt itself. It's a feedback loop. Every year, the US government spends more than it takes in, creating a budget deficit. To cover that deficit, it has to borrow more money, adding to the national debt. This has pushed the US economy into what many are calling an uncontrollable debt spiral. It has reached a point where the United States, the wealthiest nation on earth, has to borrow new money just to pay the interest on its existing debt. It's like using one credit card to pay off another, but on a national scale. And this leads to a terrifying question. What happens if this borrowing suddenly stops? This is where the real danger begins, not just for America, but for the entire world. You see, the US debt isn't just an American problem. Its impact ripples across the entire globe because the US dollar sits at the very center of the global financial system. When countries trade oil, they use dollars. When central banks around the world hold foreign reserves, they mostly hold dollars. And when global investors look for a safe place to park their money, they buy US government bonds. The American economy is the foundation upon which much of the world's financial architecture is built. If that foundation starts to shake, the whole structure could collapse like a set of dominoes. A crisis in the US wouldn't be contained within its borders. It would trigger a global economic earthquake. This leads us to the critical question everyone is secretly wondering. Could the US actually become unable to repay its debt? Could it default? Theoretically, yes. Practically, it's almost impossible. And the reason for that is something called the exorbitant privilege. The US controls the world's primary reserve currency, and it has the power to print that currency. If the US government truly needed to repay its debt, it could simply instruct the Federal Reserve to print more dollars. Problem solved, right? Not quite. This so-called solution creates a far, far bigger problem, a global inflation explosion. America might technically pay off its IOUs, but in doing so, it would devalue the dollar for everyone holding it. This would effectively export inflation to the rest of the world, dragging the entire global economy into chaos. It's a choice between a default and hyperinflation, and neither option is good. So, why is US debt this important for the world? Why should someone in Europe, Asia, or Africa care about America's balance sheet? There are three major reasons. First, the dollar is the king of international trade. Around 60% of all global transactions are conducted in US dollars. A collapse in the dollar's value would disrupt supply chains and trade relationships everywhere. Second, the dollar is the world's reserve currency. Most countries hold a significant portion of their national savings in dollar-denominated assets, primarily US Treasury bonds. If the value of those assets plummets, the wealth of nations would evaporate overnight. And third, US Treasury bonds are considered the safest investment on earth. They are the benchmark for risk-free assets. The entire global financial system uses them as a cornerstone. If trust in US debt collapses, it's not just America that suffers. The very idea of a safe asset disappears. The consequences would be catastrophic. World stock markets would crash, interest rates everywhere would spike, and even major corporations and banks could face collapse as the value of their holdings disintegrates. And we're not just talking hypothetically here. We are already seeing the early warning signs. The system is showing clear signs of distress. For instance, the yields on US bonds, which is the interest rate the government has to pay to borrow, have been hitting record highs. This is a sign that investors are demanding more compensation for the perceived risk. In a move that shocked the financial world, America's credit rating has been downgraded by major agencies like Fitch and S&P. This was unthinkable just a decade ago. It's a clear vote of no confidence in the country's ability to manage its finances. Meanwhile, the dollar's dominance is slowly eroding. Its share of global reserves has been falling year after year as countries look to diversify away from the dollar. Major global players like China and Russia have been actively reducing their holdings of US bonds for years, seeking to insulate themselves from potential US financial leverage. And perhaps the most alarming statistic of all, the interest payments on the US debt now exceed most other government spending categories. The government is spending more on servicing its old debt than on things like transportation, education, and veterans benefits combined. The debt is no longer just a number, it's actively cannibalizing the federal budget. So where is this debt crisis heading? What does the future hold? Broadly, there are three possible scenarios that economists are debating. The first, and most optimistic, is what's known as a soft landing. In this scenario, the US government gets its act together. It implements a combination of spending cuts and tax increases. The Federal Reserve manages to bring inflation under control without triggering a massive downturn. Interest rates calm down, and the country moves onto a more sustainable path. It's a controlled, managed transition. This is the best case scenario, but it requires incredible political will and a bit of luck. The second possibility is a hard recession. In this scenario, the measures taken to control the debt and inflation are too little, too late, or too aggressive. The dollar weakens significantly, unemployment rises, stock markets crash, and the US economy falls into a deep recession. And as we've discussed, a US recession would almost certainly trigger a global recession. This is a painful but perhaps necessary correction. The third and most terrifying scenario is a full-blown major financial crisis. This would be triggered by a sudden loss of confidence. Imagine a day when panic hits the US bond market. Investors, both foreign and domestic, rush to sell their US bonds all at once. The dollar would lose its value rapidly. This wouldn't just be a recession, it would be a complete collapse of the global economic order. Experts warn that a crisis of this magnitude could be bigger than the Great Depression of 1929 and the financial crisis of 2008 combined. The scary part is that the global economy is now more fragile and interconnected than ever before. It's not just the US that's in debt. Global debt is at record levels. Geopolitical tensions are rising, particularly between the US and China. We are also seeing the rise of alternative blocs like BRICS, which are actively working to create new financial systems that bypass the dollar. In an environment this fragile, a shock originating from the US debt market could be the spark that ignites a global inferno. The complex interwoven system that has defined the global economy for the past 50 years could unravel with breathtaking speed. And that brings us back to our biggest question. Is America's $38 trillion debt just a number, or is it the early sign of a global collapse? The honest answer is we don't know for sure. But the trends are pointing in a worrying direction. The path we are on is not sustainable. The answer to that question will shape the world's economic future in the coming years. What we do know is that the US debt crisis isn't just America's problem. It's everyone's problem. We are all passengers on this ship, and we are sailing into uncharted waters. The world economy is entering one of the most fragile and uncertain eras in modern history. The decisions made in Washington in the next few years will have consequences for every single person on this planet. Thanks for watching. What do you think is the most likely outcome? A soft landing, a hard recession, or something worse? Let me know your thoughts in the comments below. And if you found this video informative, please give it a thumbs up and subscribe for more deep dives into the forces shaping our world. See you in the next one.